A luxury giant just jumped 13% on a single piece of news. This is Kenya News Update today. Coming up, you'll discover how a new CEO from the auto industry is trying to save a fashion empire and why investors are betting billions that he can pull it off. The stock is Gucci owner Kering. The news? A sales beat and a promise of a comeback, but here's the twist. The company is still shrinking. Meet Luca De Meo, the first outsider CEO in Kering's history. Recruited from carmaker Renault, where he famously turned around a struggling business. His mission? Revive a luxury group that's been losing its shine for years. On Tuesday, he faced his first big test, quarterly earnings, and the results were a mixed bag. Fourth quarter sales fell 3% to 3.9 billion euros. That's a slight beat on estimates, but the real story is Gucci. Kering's cash cow posted a brutal 10% sales decline, yet the market celebrated. Shares soared as much as 14%. Why? Because for the first time in a long time, there's a glimmer of hope. De Meo didn't sugarcoat it. He said, 2025 was not the year we wanted. It didn't reflect the full potential of Kering, and we all know it. The full year numbers tell the painful story. Sales crashed 10% to 14.7 billion euros. Operating income plummeted 33%. The operating margin shriveled to just 11.1%. This is a company that got lost after the COVID boom. They raised prices and alienated customers. Weak demand from China, a former growth engine, hit them hard. Strategic missteps piled up. But here's what nobody's talking about. The entire luxury sector felt the love. Kering's jump sent a wave of optimism across the market. Burberry gained 3.4%. Hermes rose 3%. Italy's Brunello Cucinelli added 2.7%. Even the giant LVMH moved 1.4% higher. This wasn't just about one company. It was a vote of confidence in luxury's future. And then something shocking happened. The market decided to ignore the current pain and bet on the future promise. De Meo's playbook is starting to take shape. He appointed Demna as the new artistic director for Gucci. His first collection, La Famiglia, launched last year. It's a bold move to get the brand's reputation back on track. Analysts are watching closely. Luca Salca from Bernstein said these results point to a slight improvement across Kering's portfolio. The key question now is whether this is the start of a real turnaround. Can Gucci return to growth this year as many predict? Kering says it sees a return to growth and margin improvement in 2026, but they're light on details. The real blueprint will be revealed at their Capital Markets Day in April. De Meo assured everyone, since the second half of the year, I can assure you, we have been taking action decisively to put the group back on. The sentence trails off, but the implication is clear, the comeback is on. The impact here is massive. For investors in Nairobi and around the world, this is a high-stakes gamble. Can an auto industry executive fix a fashion house? Some say his outsider perspective is exactly what's needed. Others worry the luxury slump runs too deep. The controversy is clear. Is this a genuine inflection point or just a dead cat bounce? The stock is still down nearly 14% for the year. The unanswered question lingers, can Gucci ever be cool again? Do you think a car guy can save a fashion empire? Is this the bottom for luxury stocks, or is there more pain ahead? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking business news that moves markets.